Hello guys, welcome back to my YouTube channel, and on today's episode I'm going to talk about type of order in forex market. As we all know, we are on episode 9, and we have gone so far from episode 1 to episode 9. So if you have not yet watched the other previous episode, please try and do so and watch as we keep this moving. And in today's section I'm going to deal with some practical aspects so that you can know what are the type of market order. So let's get started. And please remember, if you are new to my YouTube channel, try to subscribe and turn on the notification bell, and try to share this with some of your friends, because this episode and this document is very simple to understand, and everyone that read it, or anyone that read it, he's going to understand it. So without wasting much time, let's get started. And please try to join my Telegram group, please, so that you can get this PDF there for free. I don't charge anything. So let's get started. Type of order in forex market. We have 4 type of major order in forex market. Then the other one subordinate then followed. As we can see here, number 1 is okay. Let's recap. In the forex market, traders can place various type of order to execute their trades. Here are some common type of orders in the forex trading. Number 1 is market order. When we say market order, what we mean is that a market order is an instruction to buy or sell a currency pair at a current market price. It is executed immediately at the best available price in the market. So what this means practically is, market order is a present condition of the market, the present price of the market, where you can buy or sell at that point. That is the market order. We can say that is, let me do practical. Let this chart load. Okay, no connection. Yeah, so let's get started. So here is the example. Look, like here now, if I say market order, let me use another chart and do example. Let me see. AUD card, Australian dollar and card. So this is the current market price. 0.87220. This is the current market price. So if I want to press order now, I can press order. This is the market order. This is the market order. Like at its current price, this is the current price of the market. So I'm selling. Either buy or sell, it doesn't matter. But all what is there is that is in the market order, is in the market current zone. Is sell, that is take. So this is what you call market order. This is number 1. We call it market order. Then limit order. A limit order is an instruction to buy or sell a pair at a specific price or better. It is used to enter a trade at a more favorable price than the current market price. For a buy limit order, the specific price must be below the current market price, while for a sell limit, it must be above the price. So this limit order, we have 2 type of limit order. We have sell limit and buy limit. So this is what it means in the practical aspect. As you can see in the definition, buy limit order specify the price must be below the market price. So this is what it means. Like buy limits. If you press here, you want to buy, then you come here, market execution, you press buy limit. What this buy limit is, from your down price, from this price. Like if this market reach here, you buy. Then if you want to buy, what you will do is that, let me write this number. Let me say 0.87126 0.87126 0.87126. So let me place a buy limit. The market execution, buy limit. Here is the order, here is the buy limit. Then I'll write that price 0.87126. then I'll place, look at the price, this is the buy limit. So whenever this market price reach here, then I will buy, even though I'm not in the market or I'm away, I'm doing something outside. So this is what it means, buy limit. So I'm buying from this price to reach up. That is what buy limit is. Then let me go for sell limit. Sell limit is above the price. So when price reach here now, when price reach here, I can sell, even though I'm in the market or I'm not in the market. Like I was away from the market, if not like within this place, I'm supposed to sell in the market. This place like is a break and retest zone. Break and retest zone. So let me show you how to. You go back again for the sell limit. Let me check the market price. Like here, if I want to sell, whenever price come there, I will be away from the chart, or I will go to school or some other thing. 0.87380. So this is the price we are going to use. Then market execution, sell limit 87380. Then I'll place it. Yeah, I'm sorry, someone called me, so let's move further. Like sell limit, you go to this is market execution, sell limit. Here you put the price 87380. Then here it's lot size. You want to use 0.01. Then here is 0.02. You place your order, sell limit. So you can see. So whenever price reach here, even though I'm not in the market, I'm away, the market will activate. Then after the market activate, then I will be on profit if the market go my favorable direction. Then if the market go against me, I will be at loss. Why? Because this is sell limit and buy limit. I've mentioned two now. There's market order, there's sell limit and buy limit. This is buy limit, this is sell limit, then this is market order. So let's go back. Then stop loss order. There, this stop order. A stop order, also known as stop loss order, it is an instrument to buy or sell a currency price. Once the market price reaches a specific level, it is used to limit potential losses. So stop loss, this stop order is, we can call it a stop loss, because stop loss is to make us to minimize our risks, and it will take us out when the market is not in our favor, even we are there or we are not there. So how to set stop loss order or stop order is like this. Now since I put this market as sell limit, so I want, if the market I don't want to lose more, I don't want to lose more than $5, so I'll put my stop order in this place, stop order. So whenever price reach here, market, even though I'm not there or I'm away, the market is going to take me out 0.87467. So I will set my stop loss order there. I will set my stop loss order. My stop order. So this is the place. Like I will go back to my execution, my trade management, this button below. Then I will reach sell limit, edit. Then here is where I'll put my stop loss, that is stop order, 0.87467. Then press enter. So you can see here is the stop order. is the stop loss order. As you can see, it's SL. So if price reach here, if this market price reach here and drop, I'll be in profit. But when price reach here and want to break above this, so it will make me to lose a little amount of money instead of me to lose huge amount of money. So this is stop loss order, or this stop order. Then even for the buy limit, you can still do it. You go, let me look for a favorable 0.64 buy limit. Still you can do it 0.64. You press a limit. You can see this is the order it has shown in red. So these are stop loss order. Then number 4, take profit order. Take profit order is an instruction to close a trade at a specific price level when the market moves in a favorable direction. It is used to lock in price, or it is used to lock in profit and automatically exit a trade when specified profit is reached. So take profit order is an order that you set. Let me delete all these ones so that we can understand. So take profit order is like, now in this current market I sell. Australian dollar card on 1 hour time frame. So what I will do is I will target my take profit. Like when the market reach here 24 pips, then I should be out. That is my profit. I'm targeting $5 or $10. It depends on how many lots that I use. So I will use this. Look at it. 7002. Seven, no, 87002. What's happening? 8700. I made a mistake. It's here. Here is still for take profit. Here is for stop loss. I'm going on 8700. Then place order. So look at it. This is take profit. So whenever the market reach here, this is the place. So whenever market reach here in my favorable direction, I will step out in profit. So now I'm in minus, as you can see. Then let me put stop loss order in this. When price reach here above here, it should take me out. That I should be in minus some little amount of money. Let me see. 7,500. Then put at 7,500. So this is my stop loss level. This is my take profit level. So this are what we mean. Then trailing. Number 5, trailing stop order. A trailing stop order is a stop order with a dynamic level that follows the market price at a specific distance. At a specified distance, I mean, if the market moves in a trader's favor, the trailing stop will adjust automatically, helping to protect profit while allowing rooms for potential further gains. So what this means is that you can do it automatically. Like when I sell in this zone, like imagine I sell this from here. I sell an order. After I sell, I'm in profit. So what I will do is I will shift my stop loss to down. Like I'm in profit. Let me use this current position. Like let me use this. Like this, I'm already on profit for my euro Euro JPY that is on buy. So what I will do, instead of me, I don't want to be on loss, so this is where I buy. So what I will do is that since I'm in profit, then I'll put a trailing stop. I'll put it here. So whenever this market bounce and come back here, it will take me out, but still I will be in profit. So what we do, we put 920. We'll put it in this place. Stop loss. 920. 920. You put 5. You modify. So you can see. So whenever the market reverse and come here, I'm already still in profit. But why? I'm still waiting whether it can break this red zone that I mark, that I label. That is the reason why. So we still have a long way to go, so that you can be able to keep your profit and minimize your profit very well. So this is what it means, trailing stop. Then one cancel another. One cancel another is if you set a price when it has reached the market time. This is what it means in this one cancel another. Here, let me do this. Like you will set this. You press buy limit and sell limit in the same place. Buy limit and sell limit in the same place. Buy limit and sell limit in the same place, so that the market will, one we cancel another. Like, let me use here as example. This place I can either buy or sell. 0.87634. So let me do market order there. Buy. I can buy from there. Buy. 87634. Eight 87660. 87660. 87660. 87660. 87660. Oh, 87660. So this place, like do I show you buy limit and sell limit, you go and put them together at once. You put the same variable, the same this thing at the same place. You use the same price, buy stop and sell stop. Then what again do we have? Good till cancelled. This order remains active until the trader manually cancelled it, or until it is executed. It is not limited to a specific trade section. So what this means is that good till cancel, that is, the trade will be there till you cancel it by yourself. That you can cancel it by yourself manually. So you don't need anybody interference, and nothing will be, either you're in profit or in loss, you are going to set it by yourself. So in the conclusion of this class, generally in summary, is today I teach how to order, type of order in forex market order, limit order, stop loss order, take profit order, trailing stop order, one cancel another, good till cancelled. So you can go through this PDF. I'm going to send it on a Telegram group that is going to be there, record permanently. No one is going to delete it, so it will be there on Telegram. So follow it, and step by step you are going to get there. Understand? So try to subscribe and turn on the notification bell, and